Hey guys, Jason here from ChartGuys.com. We're looking at ARRY today. I normally don't cover this ticker, and I don't know if I will do it again, but we're seeing a lot of volatility, so I thought I would weigh in, look at some big picture stuff, and show you guys how we use technical analysis to try and make some decisions on the short term using all the information we have. So the first thing I want to do is drill down from my monthly chart, take a look at what's going on. This is an unsustainable trend, really. We're moving very, very quickly, and each time that ARRY has peaked above its 71 RSI, so that is a measure of the current price as compared to the most recent 14 periods, it tells you basically if you're paying too much, or at least you're paying a lot more than people have been paying recently. That's a better way to look at it. And generally, when you reach these levels, things tend to pull back and cool off a little bit. So we can see multiple times here where our RSI in the monthly time frame has peaked, and we see substantial pullback. Peak, pullback. Now we're peaking again, and well, if history repeats itself, we'll see a pullback. So we need to be conscious on the monthly time frame of a pullback from this level. I know we just had big moves to the upside, but we have to make sure we're watching those RSIs on the major time frames. Weekly, let's go there. Nearing oversold conditions last time we got above our RSI, and again, each time we've managed to get our RSI above 70, we see a little bit of a pullback. Right now we're nearing that edge, so if we could probably move a little bit more to the upside, but we need to be conscious of the fact that the weekly time frame is nearing overbought conditions as well. We need to see some consolidation. That's probably going to come in the form of this daily chart. So daily is not overbought yet. We need to be watching for potential pullback. There's going to be a lot of profit taking from this, so we need to be aware of these conditions. Now let's jump to the 5-minute time frame and take a look at the craziness that happened today. So here's our news after hours, a big peak, big drop. We've got almost a 5-minute oversold condition where our RSI dips below 30. And then today we just spent a lot of time grinding and doing quite well, actually. So here's our 5-minute time frame. The only thing I'm concerned with here is the quick move. We didn't have a lot of time to cool off, and the RSIs on the 5-minute time frame or any time frame all sort of follow the same rules. You need periods of consolidation. So here we see a big move. We start to consolidate. We take a rest. So even though we are seeing a little bit of selling pressure here and the loss of price, that's a good thing for sustainability. We want to see the price cooling off, and each additional period that's either going sideways or going down helps that RSI calculation. And it's not so much the RSI calculation that's going to be dictating the action here. It's representative of the price action that you're seeing. So here's our 5-minute time frame. We peak in overbought. We get these nice little cooling periods. The RSI cools off into its regular zone. And once we're cooled off a little bit, sitting down here at 57, we see that price change. 5-minute trend moves back up to the upside. We start setting some new highs. And now we're starting to see a little bit of divergence. So our RSI is trending down. The price is trending up, and when you get a divergence like that, it suggests that there might be a correction or a change occurring on inside the psychology of the market that it hasn't quite manifested into actual price action changes yet. So what do? We look for some key levels. We look to see what might be happening, and I can tell from looking at this, at least, we seem to be forming a little bit of a wedge shape, and a wedge looks something like this. This is not going to be the final pattern that I would utilize, but I want to show you how these trend lines converge, okay? So once we start getting our trend lines, we look for support and resistance. We see this tightening range, and when you get a triangle, this is an ascending wedge. When you get this ascending wedge formed up, once you lose that level, and it can break either direction here. I know I'm just dumping information on you guys, but this is what we do. If we lose the trend line support, generally, and this is a general rule, you move to the downside. So here's our price, we broke, and we would fall. That would be what would be expected in a general ascending wedge pattern. All right, so let's assume we're starting tomorrow. Fresh slate right here. What do? Well, we know that monthly, weekly is almost overbought. We're seeing some movement to the downside. Here's our 5-minute chart. We've had a very aggressive day. Expect some profit taking, and we're starting to see some weakness and bearish divergence at the end of the day. So what we're going to do is watch for our key levels. We know that on today's action, we had support at 24.10. I would consider this to be an important support level at 24.33. And the last support of the afternoon, ignoring this big flush down here, I think we've got some support right around 25.11. Now I'm just using the lows of these big impulses down, these big pushes, the bear attacks. You have to look at that and say this is as far as the bears were able to get in a given moment. So this is as far as they're able to get, probably next time we might see some support there, and that's really all it is. There's nothing crazy or magical about it. We just hope and pray that next time we get into a similar situation, we see support levels. So if this is indeed a bearish pattern, we're going to look for support at 25.11, see if these hold. If they do, fantastic. They reaffirmed as support levels, and we'll start looking at resistances. But should all of these fail, and we see a lot of profit taking tomorrow, there's no real support here on the 5-minute time frame until we get into this very, very familiar area of 21.30. So we could very well return there tomorrow. I don't know if we will. We just have to react to what we're seeing. And technical analysis is reacting. It is not predicting. So we're looking for possible outcomes, possible scenarios, and we start to react to either direction. So we've made a case for the bears. Let's see what the bulls could possibly do. RSI 52, not in bad shape. What we could do if we opened up at this level, I would just be looking for resistance and interaction. We have a double top here, 26.14. I don't know if this big spike is legitimate, but if it is, we would also look for resistance up here at 26.83. So there's our key levels going into tomorrow, assuming we open in this area. And on the daily chart, we've got nothing to worry about, it looks like. Yeah. Blue sky territory. Should we get over 26.83? Just keep a close eye on those overbought conditions, guys, on the weekly and monthly time frames. We may peak up. We may try to get back up to 26.83, but the technicals tell us to expect some consolidation, expect some pullback, and best of luck to you. If you want to learn more about technical analysis, check us out, ChartGuys.com. We've been running charts like this for 4 years now. Huge community, amazing people. We just love this. It's my passion. I love charts. So thank you for watching, and good luck to you in all your trades.